Well, first I want to thank the SAA for inviting me to speak at the conference. I'm honored to be here in front of you. And what I wanted to do today was spend half the presentation giving you our view of U.S. Auto sales, not just for 2013, but also in the years to come, and spend the second half of the presentation trying to convince you even more that the pickup truck segment in the U.S. is poised to meaningfully outperform auto sales, we believe, in the next 12 to 18 months. And I'll only use the word housing once more in this presentation. So why don't we begin? We'll go on to the next slide. So the last time I had the privilege of speaking at an SAA conference, it was September of 2011. We had just come off a really tough summer in the markets, and we had walked in to 2012 with a 13.9 million light vehicle auto sales forecast for 2012, which at September of 2011 at the SAA conference, I told people, Wall Street will be very happy if we hit a 13.9 SAAR in 2012, but you, the auto industry, should not be, because a 13.9 SAAR, and of course, as you know, we actually beat that last year and hit about a 14.5 million SAAR, is still a very recessionary level of demand. It's only about 6.8% of American licensed drivers buying new vehicles. That's below where we were in the early 1990s and even the early 1980s recessions. And 1 percentage point equals 2 million units of demand. So it was a good year. We're all very happy. We're very happy that the auto sales number beat our forecast. But it's very important to remember this slide in the context of the rest of my presentation, because auto sales by historical comparisons are still very depressed in the US. And when we think about auto sales, we ask ourselves two questions. One is, when will those vehicles that we're always told that are aging will stop aging and start scrapping? And two, and this is a very important question, will society, or to what extent will society, convert those scrap units into new auto sales? And we'll get into both. When we think about the first question, when will cars stop aging and start scrapping, we know that every year cars seem to be getting older and older. But timing an inflection point for a scrappage recovery has become increasingly complicated for two reasons. One, we have many more vehicles per household than we've ever had, which of course we refer to as vehicle density, and Ellen referred to it before. Even though that's come down in recent years, it's still far above where we were even in the boom times in the 1990s. And because we're driving fewer vehicles, and of course cars last a lot longer, the miles driven per vehicle ratio has come down quite a bit. And what this done, as we believe, is just complicated the analysis around when those vehicles will actually start to go into scrap, because we're not utilizing the vehicles as much as we were a few years ago. When I get to my pickup truck segment, I'm going to also use this data to explain why analysis of segment shifts that solely look at sales numbers can be very, very misleading, because this doesn't really tell you, so at least monthly sales data doesn't really tell you exactly what's going on, just given that we have more vehicles per household and we're driving fewer miles per vehicle. So we actually think that the way to look at the cycle is not so much at the fleet age level, which is 11 years, but actually at the scrap age level. We want to know, what's the age of a vehicle going into scrap in the US? And what we did recently is we examined a 3-year period. We looked at the fleet in 2012, in 09, and 06. And we saw that about 70% of the population, or at least the 70% of the vehicles going into scrap in any given 3-year period of those 3 samples, were vehicles that were aged about 11 to 23 years old, with the real sweet spot being about 15 to 17 years old. So today we learned that the average age of a vehicle going into scrap, reaching the end of its useful life, is actually more in the kind of mid-teens. And this brings about some good news, not imminent good news, but certainly good news for the next few years from a sales perspective. So we look at the majority of the US vehicle population, not just today, but even back in 09 and 06, we know that the majority, the biggest block of vehicles is late 1990s to sort of early to mid 2000s model year. So the fleet age today, as we all know, is about 11 years old. So we're just knocking on the door of that 11 to 23 year sweet spot. The good news is I think we've got plenty of years, and particularly in the next 3 to 5 years, where we're likely to see a major inflection for the scrap rate, which could drive a huge replacement demand opportunity. The bad news is that because we're just knocking on the door of that typical sweet spot, It doesn't have to occur in 2013 unless, of course, the economy just simply recovers faster. But the good news is this is just the beginning of the multi-year recovery. In fact, we believe that most of the improvement in auto sales last year was not a result of higher scrap, but as I'll talk about in a minute, an improvement of the decline in the vehicle density ratio. But again, the percentage of the population today that's between 11 and 23 years old is significantly higher than where it was in 2009 and 2006, as you can tell in the bottom right-hand chart. So the next slide, the second question, so we know that the first question, the answer is very optimistic. We are still at the beginning of a multi-year scrap recovery. But the second question around conversion of scrap is equally important. 5 years ago, it wasn't that important to really think about the ratio of vehicles per household because the age-old rule was that if you can forecast a scrap rate, you're pretty much going to be right on the mark with your auto sales forecast because, hey, sales had almost never fallen below scrap with perhaps one exception in the early 1990s. But unfortunately, with the Great Recession and some of the demographic shifts we're seeing in the U.S., that rule has changed. According to Polk, the U.S. passenger car population has fallen by 7 million since 2007. That's just passenger car segments. And we believe this explains why most forecasters, including ourselves back in 2008, just simply failed to ever think that we can get to that 12 or 13 million SAR. Remember that first slide that we talked about that auto sales today are still at very recessionary levels. Part of it is because this is a new trend that very few of us have ever really seen before. And a 1% change in the ratio of vehicles per household or vehicles per driver is about 2 million units of sales. Huge, huge sensitivity. One more point on this. If you draw up scenarios of where the ratio of vehicles per household can go in the US, the different scenarios are incredible. If you told me today, what happens if the vehicle per household ratio goes back to where we were in the mid-1990s, so just on the left-hand chart there, I would tell you that the US probably has to scrap and not replace another 10 million vehicles. Mathematically, that could mean that we've already seen perhaps the best days of the SAR. But if you were to ask me, well, what happens if the ratio stabilizes, then think about slide number 1 again. Then we would go immediately back to a normalized, non-recessionary ratio of sales per licensed driver, much like we saw happen a year ago. And the SAR will continue to dramatically outperform GDP. And we'll probably do 16 million units, not in a year or 2 or 3, but tomorrow, if that density ratio stops to go down. So one of the key considerations as we think about auto sales in the next slide is understanding where that ratio goes to. I won't spend a lot of time on this today, but we at Citi have done a survey for the past 2 years. We call it Do They Want to Drive? The Vehicle Density Survey. We go out to America every few months and we ask Americans 3 questions. 1, how many vehicles per household do you have today? 2, how many vehicles per household do you expect you'll have 2 years from today? And 3, why? What's driving your decision? The good news is that the rate of decline that we've seen since early 2010 is lessening, and we believe that that has actually driven much of the kind of optically strong SAR that you saw in 2012. But because it's still declining, it explains why the sales per driver ratio, again back to slide number 1, is still pretty depressed. Of course, unfortunately, our 2-year outlook is still calling for a smaller but still a decline. As you can tell, there are some demographic issues where if you look at the percent change in forecasted density by different age groups, you see the 45 and higher, it's the bottom right chart, group, tends to tell us that no matter what happens in the economy, they're going to have fewer vehicles per household in the next 2 years. And it's the 18 through 44-year-old age group that's left to pick up the slack. And lately, the good news is that they've begun to show better results in our surveys. But the density drag, we believe, still remains one of the biggest risks to the cycle. We can talk about it more in Q&A, but it's definitely something to keep an eye on. So moving on to our forecast, we are forecasting a 15.0 2013 U.S. light vehicle sales number. That's partly based on our latest vehicle density survey. I'd say we're probably a little bit below the consensus thinking. So we're certainly not seeing a 16 million indication in our latest density survey, but we do think it should be another solid year. Again, 15 million is still actually fairly recessionary in terms of the percentage of drivers buying new vehicles. And of course, the production environment, as Jeff and others talked to before, likely slower production growth in 2013, although still pretty solid numbers. So what are we excited about today? What we're excited about is actually the outlook for US pickup trucks. And we think that one of the biggest opportunities and stories that you're going to see in the next 12 to 18 months will indeed be the rise of the pickup truck segment once again. In fact, what's astonishing to us is that every pent-up demand indicator we look at, and I mean everyone, screens much more positively for pickup trucks than it does for cars. In fact, I think it's analytically almost impossible to be very optimistic or bullish on auto sales, but to be pessimistic or not, at least not equally as bullish, if not more, on the pickup truck segment. The average age of the cars are about 11 years old. We believe, according to Experian data, the average age of full-size pickups closer to 13 years old. As Ellen mentioned before, about 31 million full-size pickup trucks on our roads. The pickup truck population has grown since 2007. The population of passenger cars has gone down. The scrap rate for cars is already, believe it or not, above trend. I'll show that chart in a minute. The scrap rate for pickup trucks is still very much below trend. Cars have had very solid used vehicle values, but believe it or not, the pickup trucks have performed a little bit better. For cars, we've seen some tremendous product cycles already, and I'm sure we'll see many more at the show, but the pickup truck product cycle resurgence is only just beginning. And cars have very varied segment loyalty, whereas the full-size pickup trucks have the highest segment loyalty. And lastly, we actually think, having analyzed the pickup truck population by state, that the pickup trucks are positioned in states, or at least overweight the states, that are poised or forecasted by economists to outgrow the national GDP average in the next few years. As I mentioned before, because we have more vehicles per household than we did 10 years ago, and because the miles driven per vehicle ratio has gone down, looking at just sales mix to determine what people are buying in and out of in terms of segments has become misleading. Because you no longer really know whether the consumer is just delaying a purchase or actually trading in, let's say, a pickup truck to buy a smaller vehicle. And when you look at pickup truck sales mix on the left, you see that it's gone down quite a bit. It's even gone down in 2012, and that's led a lot of people to believe that this segment is at best maybe, kind of in line to maybe only a slight improver in the next year or two. But again, solely looking at the pickup truck sales market, given the dynamics we have today in terms of the number of vehicles per household, fewer miles driven per vehicle, and of course vehicles last longer, can be misleading. We often hear about the so-called urban personal use driver in the next slide. There we go. We often hear about the exit of the personal use owner in the pickup truck market, but we asked the following couple of questions. If people were really shifting away from pickup truck ownership, they would presumably sell or trade their pickup trucks and buy, other vehicles or buy nothing at all. That would create an excess supply of full-size pickup trucks that would either be scrapped and not replaced, i.e. population going down, or we would see substantial pressure on the price of used full-size pickup trucks because of the glut in supply, much like, by the way, we've seen for the SUV market. So let's take a look at what's actually happened. On the bottom left, we see, according to Polk data, that the pickup truck population has outperformed and outgrown the total light vehicle population. Okay, interesting. Why are these people who presumably don't want pickup trucks just not getting rid of them, and why aren't we scrapping and not replacing pickups? We've done it for 7 million passenger cars. We've done it for 0 pickup trucks. If you look at the chart below that, it's a little bit hard to see, but the scrap rate in the blue line for cars, you can tell is already a little bit above trend in that downsloping black line. And the truck scrap rate, this includes all light trucks, by the way, in the bar graph below it is still below trend. So which one is above and which one is below? My definition of pent-up demand is the one below the trend line. And again, that screams much more for trucks than it does for cars. And lastly, if we look at the price of used vehicles in the marketplace using ADESA data, and we index it back to 100 in January of 2000, the green being the industry has done pretty well. the full-size SUVs, which is a segment we all agree has seen a shift away in demand, is incredibly depressed. But check out the full-size pickup trucks in the blue. Not only have they held in with the industry, they've actually outperformed slightly, and remember, with supply of vehicles going up, not down. Pretty incredible.